You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today's Tuesday, 10th day of June, 2025. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here or right now. We do 2 live broadcasts every trading day. Now, the first live broadcast, that's our live training room, so that's private, members only, and those who are taking their 1-week free trial. If you've not taken your 1-week free trial, go to mytradingiq.com. At the very top of the page, there is a purple button. You can't miss it. Click it, fill out the form, hit submit. We'll get your indicators up and running today. Your trial will officially start tomorrow. There's no credit card required. And you're going to get 5 consecutive trading days. So the upcoming weekend will not count against you. Now, when you take the trial, you're not just getting access to the live training room. What's going to happen is for 5 consecutive trading days, we're going to treat you just like you were already a member, a passport holder. You'll have access to everything. With one exception, and that's the members only workshop on Thursday night. So, when the live training room ends each day, we take a 30-minute break and come back for this broadcast, the noon broadcast, which is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. Now, there's 2 different ways you can join this afternoon broadcast live. The best way, you only have to do it once. Go to mytradingiq.com, but this time scroll down the page to where it says noon broadcast. Click that link, fill out that 30-second registration form, and you're done. What will happen going forward is every trading day, you'll get an email about an hour before this broadcast starts. In that email, there will be a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. The benefit there is you'll have access to the question box, so you can ask questions and participate in the discussion. Of course, there'll be days you're out of the office, away from the desktop, maybe this time of year you're on vacation, but you still want to join live. And there'll be days when you're busy, can't join live, but want to get caught up later. Good news, you can do both of those via our YouTube channel, which is easy to remember. youtube.com/CFRN. That's the Christian Financial Radio Network since 2005. But you don't have to remember all that. Just youtube.com/CFRN. Now, if you're new to our neck of the woods, our little corner of the universe, the YouTube channel is a great way to get to know who we really are. Not only do we broadcast live each and every trading day on our YouTube channel, as we're doing right now, simulcasting, we also archive each and every daily broadcast. Currently, there are over 2,800 daily episodes archived for your educational and viewing pleasure. Now, obviously, you're not going to watch them all, nor do you need to. But it is a great resource to have at your fingertips, and it kind of lets you know we've been around a minute or two or three. youtube.com/CFRN. Now, Michael is back from his vacation, so our afternoon schedule, as you see posted here, is going to be complete. Last Friday and Monday, yesterday, Michael was away, so we didn't do this part. We're going to do the whole thing today, but there's one hiccup. I know what you're thinking. Oh, there's always something. Well, it's not that bad. How bad is it? I'm going to show you. It's that bad. I got to take a quick 5 minutes to do something that I didn't get done before we started. My apology. But in 5 minutes I'll be back, and we'll start out with today's daily devotional, which is actually the final day for this devotional. We're on day 6 of 6, and the topic is more than money. Now, today's scripture is Mark 4, verses 1 through 20. I'll be sharing it from the Message translation when I come back. So maybe you might want to grab your Bible, or you even maybe could open your Bible app if you want to read along. So stand tight, or sit tight, and I'll be right back. Sorry. Okay, I know I said 5 minutes, but I really did do my best. So, anyway, let's pick up where we normally start, and that's with our daily devotional. Again, this is day 6 of 6 on the topic More Than Money. Our scripture today is Mark 4, verses 1 through 20, and I'll be sharing from the Message translation. He went back to teaching by the sea. A crowd built up to such a great size that he had to get into an offshore boat, using the boat as a pulpit as the people pushed to the water's edge. He taught by using stories, many stories. Listen, what do you think of this? A farmer planted seed. As he scattered the seed, some of it fell on the road and birds ate it. Some fell in the gravel. It sprouted quickly but didn't put down roots. So when the sun came up, it withered just as quickly. Some fell in the weeds. As it came up, it was strangled among the weeds and nothing came of it. But some fell on good earth and came up with a flourish, producing a harvest exceeding his wildest dreams. Verse 9. Are you listening to this? Really listening? When they were off by themselves, those who were close to him, along with the 12, asked about the stories. He told them, "You've been given insight into God's kingdom. You know how it works. But to those who can't see it yet, everything comes in stories, creating readiness, nudging them toward a welcome awakening." These are people whose eyes are open but don't see a thing, whose ears are open but don't understand a word, who avoid making an about face and getting forgiven. He continued, "Do you see how this story works? All my stories work this way. The farmer plants the word. Some people are like the seed that falls on the hardened soil of the road. No sooner do they hear the word than Satan snatches away what has been planted in them. And some are like the seeds that land in the gravel. When they first hear the word, they respond with great enthusiasm. But there is such shallow soil of character that when the emotions wear off and some difficulty arrives, there's nothing to show for it. The seed cast in the weeds represents the ones who hear the kingdom news but are overwhelmed with worries about all the things they have to do and all the things they want to get. The stress strangles what they heard and nothing comes of it. But the seed planted in the good earth represents those who hear the word, embrace it, and produce a harvest beyond their wildest dreams. Again, that was Mark 4, verses 1 through 20 from the Message translation. So our topic today, as we wrap up this devotional, let God's Word take root. God's Word has the power to change lives, but Jesus warned that it can be choked out. The worries and distractions of life, the deceitfulness of wealth, and the desires for other things all tempt us to put money above God. The condition of our hearts greatly influences how we receive and respond to God. If our hearts are preoccupied with the pursuit of wealth, material possessions, security, and identity, it will hinder our relationship with Him. God didn't create wealth for it to replace Himself in our lives. Now, we've talked. There's nothing wrong with having a nice house, a nice car, sending your kids off to school in nice clothes. But it's back to the beginning of this devotional where we talked about no man can serve two masters. He will love one and hate the other. So, if God blesses you financially, just make sure you remember it's okay to be blessed, but the real reason He blesses you, it's not because you're so pretty. It's because He wants you to be a blessing to others. But when we trust God completely and give Him His rightful position of first place in our hearts, we create fertile soil for His Word to grow in our hearts. The truth is, we can give and not have love for God. But we cannot love God and not be givers. Why? Because the heart of the Father is to give. And if God is living in your heart, you're going to just naturally become a giver. God is the ultimate giver, giving us His one and only Son as a sacrifice for our sins. Are you ready to let go of any grip money has on you and make room for God to reign supreme in your heart with no competitors? Let's pray. Heavenly Father, we don't always recognize when money has replaced you in our lives. But we want you to be first place in our hearts. We need the help of the Holy Spirit so that our tithing, saving, spending, and offerings reveal that you are the only King in our heart. Forgive us for the times when we did not invite you into the financial decisions we made in the past, and help us to manage your finances as faithful stewards. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen, and happy Tuesday. Now let me give you the numbers from around the world. I'm going to start here in the U.S. with the cash markets, or the indices as they're called. Currently the Dow is up 63 points, NASDAQ is up 65, S&P 500 is up 20, and the Russell 2000 is up 13. No movers or shakers, but they're all green. And you know, as futures traders, we like them to be all green or all red. When they're mixed, you don't get the same nice follow-through that you like in your trading. In the commodity basket, crude oil up 54 cents, trading 65.83 last. It's a gain of almost 1%, or $540 per contract traded. Gold down $12.10, trading 33.4230 last. Silver down 21 cents, trading 36.58 last. Now you know we're flirting with 13-year highs. Now what's my target for silver? Well, it's been to $50 twice in history. Once when the Hunt brothers tried to corner the market, and it didn't end well for them. And then the second time, it was just natural causes. But both times, the price got rejected at $50. I'm believing that this time price will hit that $50 mark for the third time in history, trade through it, and then on the pullback, because that's how markets work, you get a leg and a retracement, a leg and a retracement, that the $50 resistance will become support. We'll see what happens. In the Asian markets at the close, the Nikkei gained 122 points, Shanghai dropped 14, Hang Seng fell 18. And in the European markets at the close, FTSE up 20, the DAX down 186, the CAC up 12. So really, no movers or shakers anywhere. It was a mixed day for Asia. It was a mixed day for the UK. But so far, it is a green Radio Tuesday here in the US of A. Let's take a look at the news. The Pentagon has deployed 700 Marines and an additional 2,000 National Guard troops to Los Angeles, this was yesterday, as tensions between the federal government and California escalated over immigration-related protests and clashes in the city. The action marks a rare domestic deployment of Marines and brings the total Guard troops to 4,000 as demonstrations over immigration's arrests continued for a fourth day. Now, I watched live last night as these peaceful, I'm doing air quotes here, protesters, you know, the ones throwing Molotov cocktails and lighting cars on fire and defacing federal buildings, yeah, those peaceful protesters. I watched them being handcuffed and loaded into buses that were waiting to take them to jail. Now, I'm not naive. I'm sure they're already out and back on the picket line or the protest line. Or I don't know, maybe George gives them a day off after they've been arrested, or maybe they even get a bonus. The deployments came the same day California Governor Newsom filed a lawsuit over President Trump's decision to deploy the first batch of 2,000 National Guard troops to Los Angeles over the weekend. Trump threatened to arrest Newsom and Los Angeles Mayor Karen Bass if they impeded the Guard's work. The Marines and Guard have been ordered to protect federal property and personnel in the nation's second largest city. Trump used Article 10 authority to bypass Newsom and take charge of the Guard Saturday. The approach was last used in 1965 by President Lyndon Johnson to protect civil rights marchers. Learn more about the Guard, a nearly 400-year-old reserve force of the U.S. military. And Warner Brothers Discovery is breaking up into two publicly traded companies by mid-2026, separating its film and streaming operations from its global cable networks. The new studios and streaming company, including HBO, HBO Max, Warner Brothers Television, and DC Studios, will be led by current CEO David Zaslav. The Global Networks unit, including CNN, TNT, Sports, and Discovery, will be run by current CFO Gunnar Weidenfels. The move follows a corporate reorganization late last year that split the company into two internal divisions. Executives say the split will let the streaming group respond more quickly to market trends, while the Networks Group focuses on managing its legacy portfolio. Streaming now accounts for 44.3% of total TV usage in the U.S., surpassing cable at 24.5%, and broadcast TV that you get with an antenna at 20.8%. A significant portion of the company's debt will go with Global Networks, which will retain a 20% stake in the streaming business, with plans to monetize that stake in the future to help reduce its debt. As of March, Warner Brothers Discovery reported about $34 billion in debt, much of it tied to the 2022 Warner Media Discovery merger. And it's not in this article, but I saw it this morning on TV, and if it's on TV, it's got to be true, right? Okay. Disney is now taking full control of Hulu. So, I guess on Hulu now, all we're going to see are reruns of Will and Grace and maybe RuPaul's Drag Race. Getty filed a parallel suit against Stability. Let me give you the whole article. Most of you know who Getty Images are. If you've ever used one of the images they own on your website or even a blog post, you probably got a very threatening and nasty letter. One of our longtime members years ago went on a hunting trip, and he I forget what animal it was out in the wild. It's like big game. He shot it, and I wanted to put it on a blog, so I did, his story, but I needed an image of that animal. I can't remember what the animal was. So I went to Google Images to get the image, and I put it on the blog post. And I didn't really pay attention to the fact that it was owned by Getty. It wasn't fair use or free use. And I got a very nasty letter saying that I had to pay some incredible fine to them. Now, knowing a thing or two about this kind of thing, I just ignored them, and they finally went away. So why am I even telling you this story? Getty Images versus Stability AI. Oral arguments in Getty Images' landmark case against Stability AI began in the British High Court yesterday, marking the first major copyright trial involving a generative AI company. The outcome could shape how intellectual property law applies to training AI models. The Seattle-based Getty Images alleges the London-based AI startup used around 12 million copyrighted images without permission or payment to train its text-to-image tool called Stable Diffusion. The tool draws on a repository of outsourced images to generate artwork and hyper-realistic photos from text prompts. Stability argues its use of Getty's content is protected under narrow exceptions in copyright law known as fair dealings in the UK and fair use in the US. Stability also says the trial, which could last 3 weeks, shouldn't be heard in the UK since the trainings were run on computers in the US. Getty filed a parallel suit against Stability in the US in early 2023. It's one of many pending cases on a growing docket of litigation involving AI and media companies. Wall Street. I guess that was Wall Street. Your own job is a binary event. You either have one or you don't. I hope you catch the humor there. Labor market data, so closely tracked by investors, offers a different story about U.S. employment, one told in the aggregate. And reconciling the two right now has made discussion about the overall state of the U.S. job market particularly rich. In May, the U.S. economy added 139,000 new jobs, while the unemployment rate held steady at 4.2%. Data on job openings posted last week showed a surprise increase in April, though hiring demand continues to cool from post-pandemic highs. That's at least according to the U.S. government. Data from payroll processor ADP published last week, however, suggested there were only 37,000 roles added to the private sector, the fewest since March of 2023. For recent college grads and others at the entry level of the workforce, the job market hasn't been this challenging in years. Yeah, because now it's merit-based. Take this labor market data together with surveys from the services and manufacturing industries, and some economists see signs of paralysis forming in the U.S. economy. Look out your window. Does it look like the sky's falling? It keeps a computer capable of operating without errors. The computer called Starling is set to launch by 2029. The quantum computer will reside in IBM's new quantum data center in upstate New York and is expected to perform 20,000 more operations than today's quantum computers. Starling will be fault tolerant, IBM said, meaning it would be able to perform quantum operations for things like drug discovery, supply chain optimization, semiconductor design, and financial risk analysis without the errors that plague quantum computers today and make them less useful than traditional computers. The news comes the day after IBM stock hit an all-time high of $273 yesterday. Shares are up more than 60% over the past year, more than the S&P 500's roughly 12% gain. Now, I'd sure like to know who bought all that stock ahead of the pop. Maybe Nancy got some. Apple's iPad is getting some major enhancements that should make it far more useful as a laptop replacement. Oh, by the way, those of you that wanted to get that same computer I got from Amazon, from the Amazing Tech Store, I couldn't find it. I did post a link in the Breeze channel, and I'm waiting for the company to contact me to see if they have any more available at that price. Back to the article. The improvements are part of the company's iPad OS 26, which Apple announced during its WWDC 2025 conference yesterday. They include upgraded multitasking capabilities that will allow people to use the iPad more like a Mac and less like an iPhone. It's an enormous departure from Apple's previous strategy, which saw the company hold off on adding too many multitasking features to its iPad line out of fear of cannibalizing its MacBook Air. And by the way, the MacBook Air is the most sold laptop in the US. The updates include the ability to use windowed versions of apps that you can move and resize just as you would on a Mac. Previously, apps could only be resized in certain instances, and apps snap to specific areas of the iPad screen. Now you'll be able to layer apps on top of each other and have even more of them slightly off screen to make room for other apps. Well, you could get an external monitor. Apple also added a new menu bar at the top of the iPad screen where you can access options like app-specific commands similar to the Mac. And if you're a Mac person, you can Google it. I guess they finally did. Boeing is heading into the Paris Air Show after a blockbuster May that included booking 303 new orders and rolling out 38 new 737 MAX jets, a production rate that it has been working to reach for more than a year. The company also delivered 45 aircraft last month. Citibank or Citigroup is set to put aside hundreds of millions of dollars more than it did last quarter to account for potential losses on loans and credit cards, an early sign that the biggest U.S. banks may be bracing for deteriorating consumer health. Well, there's a cure for that. It's called lowering the interest rate, Jerome. You know, like the UK's done 9 times. Talks between the U.S. and China resumed today after 6 hours of discussions between top officials in London yesterday. Today's talks are expected to continue to focus on easing tensions over rare earths and tech. And Pete Hegseth, our defense secretary, told Congress efficiency found $6 billion in cuts so far from the agency's budget of nearly $1 trillion. It's working. Everybody wants it to happen overnight. Well, we didn't get in this trouble overnight, and we're not going to get out overnight. The markets are rising, and an incoming tide floats all boats, right? OpenAI plans to add Alphabet's Google Cloud service to meet its growing needs for computing capacity, according to 3 sources who told this to Reuters, marking a surprising collaboration between 2 prominent competitors in the artificial intelligence sector. The deal, which has been under discussion for a few months, was finalized in May, one of the 3 sources said. It underscores how massive computing demands to train and deploy AI models are reshaping the competitive dynamics in AI, and marks OpenAI's latest move to diversify its computing sources beyond its major supporter, Microsoft, including its high-profile Stargate data center project. And that's it for the world news. Let's take a look at the local news. I'm running way behind, but that's okay. When Michael's done, I'll get everything covered. I can see already I screwed this up. Let's do that. Does that fix it? Yeah. Logic 247, that's our 24/7 around-the-clock E-mini alert service. Currently in week 358. Over the last 358 weeks, we've issued over 19,800 individual handcrafted alerts. When Valerie did the recap this morning at 7 a.m. Eastern, since the markets opened Sunday night at 6 p.m. Eastern, we've issued a total of 28 alerts, still waiting on the outcome of 7. That gives us 21 actionable alerts, of which 2 or 10% would have been stopped out, again based on market structure and the simple process that we teach all of our passport holders. Now, 358 weeks, over 19,800 alerts. We've averaged on a weekly basis 20% or less being stopped out, again based on simple market structure and the simple process we teach all passport holders. The logic alerts can come out anytime around the clock, 2 a.m. or 2 p.m. Futures trade around the clock. We have traders around the globe. Our day session is their night session, and vice versa. The true purpose of the logic alerts is to teach you how to read a chart. Whatever career you pursue, you got to be able to read whatever material or textbooks go along with that job. But when you become a trader, you got to learn to read the chart. And that's a completely different language. Used properly, the logic alerts will help you do exactly that. Now 258 weeks or 358 weeks, that's a very long time to do the math. But long before, years before, we had a Logic 247, we had the concierge trade alerts. They're different. Number one, they don't come out around the clock. I try to get them posted every evening 5 minutes before the market opens at 6 p.m. Eastern. Last night I was running 2 minutes late, 5:57. So what this means is all of our members, all of our traders, all of our trial members had all of these targets 3 minutes before the market opened. The ES, that's the S&P 500, the Dow, the Russell, crude oil, the NQ, gold, and silver. So now we can go to the charts. And we'll start where we always do. With the bellwether, the S&P 500 E-mini futures. And what do we got for a high on the day? 60.40.75. You see this high right here? Come on, give it to me. 60.57. That's our next resistance. After that, 60.70. And then after that, 61.06. Okay? Now, the daily chart's important because institutional traders, the ones with the deep pockets that actually move price, like Vanguard, BlackRock, State Street, and many others, they look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Has everything to do with account size. I encourage you, whether you trade stocks, futures, crypto, Forex, ETFs, spend 2 minutes with a daily chart of what you're about to trade on your smaller time frames. What you're doing is you're getting a free look over the shoulder of the deep pockets that actually move price. And you're able to identify major areas of potential resistance, as I just did, and also potential support. Our potential support right now is at 50 after the low of the day. 59.06 is major support. The green line is called the BBC, stands for Bull Bear Cross. When price crosses below the green line, we expect lower prices. When price crosses above the green line, we expect higher prices. But what's really neat, price always reverts to the mean. In our case, the mean is green. It's called the BBC. And when price reverts to the mean or pulls back to the BBC, the pullback holds more often than it doesn't. But eventually it'll trade through. And when it did, look what happened. The pullback held. And then we get another big leg and the pullback held. So now we're either headed up to this next major area of resistance, and if we can't trade through it, that just might be when we get our next pullback to the BBC. Okay? All right. Now, all alerts, both the Logic 247 and the Concierge Trade alerts, they're created on the 30-minute chart. Nothing magic about 30 minutes, just the time frame I chose many years ago, and it's been real good to me, so why Why would I change it? Now, the vertical line separates today, Tuesday, from yesterday, Monday. The horizontal lines are the weekly trading zones. They're published for our members and trial members every Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. When price drops to a zone, we expect support till proven otherwise. When price rallies up to a zone, we expect resistance until proven otherwise. So yesterday, we had drawn this window in, and it filled. I did it in the live training room. And then it filled again last night, and then again overnight. This was the opening candle. So remember, our members and trial members had both of these targets 3 minutes ahead of the open. We were right at the BBC. Price managed to get above the BBC, turning red and falling, which is bearish, into blue and climbing, which is bullish. And look what happened. Ran right up to the zone. Now this one candle opened at 60.19, hit a high of 60.36. Is that about 17 points? You only need 2 points to get your goal for the day. Now, when the market finds resistance, it's always going to go look for support. And where did it find it? At the short target. When the market finds support, it's going to go look for resistance, which it found at the step line, which sent it back to the short target and the zone, 59.91/92. Support, of course, is going to send the market looking for resistance. So we consolidated along the BBC for quite a few hours. But with blue and climbing coming up, now remember I said the pullback hold more often than not, but eventually it will trade through. And when you got this much blue and climbing chasing price, that's probably the time it's gonna pop right up to the long target. Resistance sent us back to support. Now we spiked the BBC, but the pullback held. Yes, this was a huge red candle all the way down, but by the time the 30-minute candle closed, look where price was, all the way back up at the long target. What's price trying to do right now? It's trying to take out the overnight highs and actually touch the weekly zone. Now where we're at right now, as you can see, it's basically, see this little arc here? It's right there. So it needs to push through there, take out that high, and then I got a feeling we'll see it touch the zone on the Dow. Here's where we opened last night. Slightly below the BBC, or no, right at it. Red and falling turned to blue and climbing, and we ripped right through the long target. That was enough to get your goal for the day and then some. And then we made it hit here. We put in the double top, just shy of last Friday's high. This is today, Tuesday. This is Monday. This is Friday. And these are this week's weekly trading zones. Now, notice as price tried to rise this morning, it ran into some resistance here for a few hours. Why? You see this right here where the red line gets below the green line? That's called a bearish cross. When you have a bearish cross that leads to an extended move where the market found support at the short target and the zone. When price revisits the area of the bearish cross, it will almost always be good resistance. 1, 2, 3, 4 30-minute candles. 2 hours. Does it happen every time? few things do in the world of trading. Does it happen more often than not? Well, you hear me talking about it every day. So anyway, off support of the short target and the zone, we've now overcome again for a second time the long target. And where should we expect resistance? You see right here where blue turned to red? That's where we're at right now. If we can push higher and take out that arc, then this high and this high are potential resistance. And if we get through that, then we revert to Friday's high. People always ask me, man, how far left do I have to look? As far as you need to. Okay. The Russell. We opened last night right at the BBC, just like the other indices. And then we made that bold run up through the target to the zone. Again, when price rallies up to a zone, we expect resistance. When it drops to a zone, we expect support until proven otherwise. Now, when price encounters a weekly zone, one of three things happens. 70% of the times, consolidation. 20% of the time is rejection. 10% of the time is the slice. That's when a 30-minute candle slices through a zone like it's not even there. When that happens and the move runs out of steam, price will typically retrace back to the zone it sliced through and then continue in the direction of the slice. Now you'll notice that the step line, see, on the way up to the high of the day, you had price, of course, then the black step line, then blue and climbing. Okay, but right here, things changed. The step line crossed to the right side of blue and climbing. Now blue and climbing is directly above price. So that's potential resistance. And of course, you have potential support times 2 right here at the zone and the BBC. All right, we'll pick up with the NQ zone, the zone. We'll pick up with that when I come back. Michael's here. He's going to give us a recap of what happened this morning in the live training room. Then do a little live trading on the TradingView platform. Okay. I'll come back, finish the recap, and close out with our good word for the day.
All right. Here it should be.
Good to have you back.
Good to be back. Good to be back.
It's always nice to go. Resolved. You know, here's the thing about travel. I love going to new places and experiencing everything. The part I dislike is the getting there and the getting home. Planes, trains, automobiles, all that jazz.
Yeah, this isn't bad when we go there because it's small airports on both sides. So, you know, at the airport, we literally park across the street from the terminal.
Nice.
And we walk to the terminal and, you know, in both airports. So it's, you know, it's not like you have to go to this parking garage and take a bus, to take a trolley, to take, you know, a train and all that stuff. You know, it's really simple. And
when we go to Africa, we have a 10-hour layover in London. That's mind-numbing.
Nice. And Heathrow?
Yeah.
That's horrible.
And it's a $50, well, this is many years ago, it was a $50 cab ride into town. But our team, everybody jumped in a cab and we went to London. And all of the team decided to get a couple of hotel rooms so they could stretch out and, you know, really catch a nice nap. My wife and I, of course, we got to go see London. So we walked around and rode the tube and got back to the hotel. Everybody was all refreshed and we were exhausted. But the whole flight takes almost 24 hours. And the airport you land in Kampala, there was a famous movie in the 70s. This really happened, where some terrorists took over the name of the movie is on the tip of my tongue, but it's a real event that actually happened. And when we walked, the first time we walked into that airport, we didn't know what to expect. The sun was just coming up, and there was none of the pleasant people that you might run into, stewardesses and whatnot in a U.S. airport. There were soldiers with long guns. And instead of our luggage like coming around on that little carousel, they were all of our luggage was dumped in the middle of the floor. It was like a literal mountain. And so everybody had to just dig through this mountain of luggage to find their luggage. And we had a bus outside waiting to take us to the orphanage. So anyway,
Nice.
I'm taking up your time, so go ahead.
That's all right. Here we go. Everybody ready? You can see all my stuff. Ready to go? Here we go. Good afternoon. All right, good. Good. Good afternoon, everyone. Happy Tuesday. Today is the 10th day of June. Wow, 2025. Now, if you've not taken a free trial with us and you want to, go here to mytradingiq.com, click on the purple button right here. There is no credit card required for the trial. Just click on that purple button. It's going to bring you to this page. Nope. Sorry, not that page. It's going to bring you to this page. There it is. This page, where all we ask for is your name, your email, your phone number. Down here at the bottom, gives you TradingView login ID, your TradingView username. If you don't have one of those, click on this link to go get one. Okay, hit the register button, and then we'll know you took the trial, and we'll give you all the information you need to get your indicators indicating and to get into the room in the morning. All right, so today was a pretty quiet day. We started off with a bang, and then it just kind of fizzled out the rest of the day. If you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today is the 10th day of June, 2025. Made 117 ticks on the NQ. We lost 13 on the Russell. We got back to break even on gold. We were up on gold. The high of the day on gold, we were up 25 ticks. But then we gave it all back. Stopped out twice. Gave it all back, -5. And then we got 5 back to get us back to 0. On the S, the high of the day was 7 ticks. On the Russell, the high of the day was 2 ticks. On the gold, I just told you, and on the NQ, we are at the high of the day. It took 8 minutes and 3 trades this morning to get to $4,050. So that ended up being 2 ticks on gold and 77 ticks on the NQ. That's what got us there. And we had 1 break-even trade also in there. I think the break-even trade was on the ES, I'm pretty sure. Anyway, on the month now, we're up $4,585 over 5 business days, averaging $917 per contract per 2-hour business day. On the year, we're at $145,055. It's over 96 business days, averaging $1,510 per contract per 2-hour business day. Now, if you were to quit trading when you get the goal for the day and add 1 contract per month, so far this year, you would only work 12.1 hours. You'd be up $50,502, and you'd be averaging $4,173 per hour. Pretty good money if you can get it. All you have to do is do it just like me every day. This was our first day this month, but we didn't get it on the first trade. That's too bad. I think we almost had it on the first trade too, on that gold trade. I think we did actually have it, but I didn't move fast enough. I was kind of getting back into the zone. Anyway, let's get into the actual trades. We'll start out with that first gold trade. We'll see if I did actually have it on that very first trade. Nope, that's not it. This is it. I think I did have it on the very first trade. He went all the way up here, and then he came back down and got me a +2 ticks right here. Anyway, we ended up getting 2 ticks on that one, and then this one pulled back to right where I thought it was going to pull back to, and we got 1 tick on that. Got us to 3. Then we got 10 there that got us to 13. Then 2 more to get us to 25. Am I looking at the right thing? Gold, yeah, gold. All right, so I'm missing something here. I missed this one, whatever that was. Because we got 2 plus 1 is 3, plus 10 is 13, plus 10 is 23, plus 2 is 25. Okay, and then we stopped out. This was a mistake here. I shouldn't have stopped out on that one. That brought us down to 10, and then I stopped out on that one also, and that brought us to -5, and I got 5 ticks here. It got us back to 0. And during the break, there was some good movement here during the break, it looks like. Now, if you just get rid of this, and you just look at the way the price moved, every leg up, how far down did it move? Every leg up. Okay. Now, you hear me talking about these things, right? When I'm saying retracements, you hear me talking about the 50% and the 100% retracements. Just look at what's happened here. Leg up, 50%, leg up, 50%, leg up, 100%, leg up. Went right through the 100%. Now, when it goes through the 100% like that, what you anticipate then is that it's going to come back to the 50% and change directions. Do you see that? So let's draw it like this: up, down, up, down, up, 100%, back up, no new high, right through the 100%, back to the 50, and down. You see that? It's a trend change. It all happened right there. Anyway, if you throw the context back on there, then you can, you throw the context back on there with the YBR, you can see what direction you should have been trading in all these conditions, and given that bias. So as price moved up, it came back to the 50%, moved up a little bit, came back down here. This is kind of a jammed up place to trade. You would have been doing 100% retracement right here. I've done the first one, but not the second one. And then it moved all the way down here. I wouldn't have done that. I would have been looking for something more in this area over here. But because you did full cycles in here, you would have started over again. So you would have started like right here. From here, right here, where it came out of the overbought to where it went back into the overbought, right in there. It would have been all jammed up. Then came out of the overbought to where it went back into the overbought. It would have been all jammed up. So this right here would have been the next one that would have been attractive to me, but it wasn't even a valid trade. So then this one here might have been, but probably not. And this right here, when it changed directions, would have been the one that I would have gone with. Right there. Okay, 50% mark right there, bouncing off of that. Would have been the trade to go with. That was gold. Okay. I'll put the question marks up. I don't know. Nobody's asking questions. Okay. Fair enough. We'll go to the Russell right now. On the Russell, we had, is that it? Yep, that's it. We just had these trades right here. We had a break even. Then we had a +2, and then we had a -15. Now that one there, I think I probably should have my stop at break even on it, but I somehow screwed that up. And I ended up with -15 on that. Just looking at it during the break, it wasn't that easy during the break. Not like the gold was anyway. I went up and pulled back here. You were below the YBR here, so you're not looking for long trades, but this is a great spot to be looking for a long trade on the retracement of this. It went up and pulled back here. Now, when it flipped the YBR, you would have been drawing from here up. Okay, so this would have been a pretty good spot right here to take a trade. You would have redrawn it after it went all the way up into there. You would have redrawn it. This would have been 100% retracement of this leg. Not a bad spot to take a trade, but then you wouldn't want to do anything in here. It's all the way over here, probably, where you came out of the oversold right here. That would have been, you would have been looking at this, right? From here up to here. So if you stretch that out from there up to there, I don't know, it's kind of messy in here. If you did take that, you probably would have stopped out. If you waited, if you didn't take that first one right there where it just hit it right there, if you were aggressive, you could have taken it right there. I wouldn't have done that though. You could have taken it conservative, but I don't think I would have done that either. And right here, the conservative right here where it came out of the oversold is probably what I would have done. And that looks like it would have been a break even for me. We just flipped the YBR right here. Now, when you flip the YBR like this, you have to draw from here like that. Okay. So this up close right here could have been an aggressive short right there. You can do the conservative short right here where it gives it down and close. We'll do that one for you. Okay. Put that always on top. And this is at 65.3, so we'll sell. Is that right? This is a 9 range, right? 63.5. Okay, 3.5. I was going to say, what the heck, man? Okay, so we'll just sell right there. We'll just sell right there. Okay, we're in right here at 62.6. Okay, so I'm going to leave that over there and we'll go on to the next market now. Okay. That was a sell right there at the 50% where it came out of the overbought. Conservative short right there at the 50% where it came out of the overbought. Now, we'll do the ES like this. Okay, just up like that and that. And on the ES, this is our whole day right here. We started out with a break even right there. That was one break even. I told you we had in the beginning. +5 and then a +2. I got us +7 over on the SA. Look, and there was another one here that I didn't count. I don't know what I got on that, but we got some more on that. I guess I can probably go look. Oh, okay. I'm sorry. This was a +1. This was a +4, and that was a +2. That's the way it worked out. Okay, +1, +4, and +2. Then during the break, it had a big move down. This pullback here wasn't near deep enough, and it still doesn't fill this gap, has it? Okay, I guess it did fill the gap. It made another gap over here that it needs to fill. And it looks like it just did. It filled that one right up too. So there was some kind of explosive movement here on the ES. It looks like. I don't know why. Between 11:30 and 12, there was a lot of movement. If you crunch this up, it went from here all the way down to here, all the way back up to here, and then it started to consolidate here where it began. And so now it's continuing up after all that. I suspect something happened somewhere to account for all that activity. We are short on the Russell here, so we really don't want the indexes to go up. So this is looking like it's in a place for a pullback right here. So what you would do is draw this right here like that, and you'll be looking for it to come back down and get into this area right here so you can buy it. Okay. That is the ES today. All right, now let's look at the NQ in a similar fashion. All right, this is our whole NQ today. This was our first trade on the NQ. We picked up 77 ticks on that one. Then we had a break even on that one. Now I went aggressive with that. That's how I ended up with a break even. I got a break even on that one. And then this one, in this particular sequence right here, I traded twice. I went aggressive on the very first one where it opened right there at the midpoint. I picked up 20 ticks on that. And then I went conservative where I gave the down close right here at the midpoint. And I picked up another 20 ticks. So I picked up 20 and then another 20. So we were at 77. Then we picked up 20 to go to 97, then another 20 to go to 117. And this had the same kind of movement that the ES had during the break. All right, made this huge move down, moved right back and consolidated and started to move up off of that area right there. Right? And that was our morning with the ES, the NQ, the Russell, and gold. And the Russell's still struggling to go anywhere right here. That trade that we took a little while ago. The gold actually had if we stretch this out, it had a nice aggressive long trade. It could have been an aggressive long trade from right here on the gold. You can still get it on the conservative side on an up close. One of the up closes right here. Still go on the conservative side on that if you want to. Looks like our Russell's coming to life now. We might get a shot at this. Get a stop to break even anyway. Over here on the NQ, you're looking at this for your pullback. So down close to the current bar in the NQ could be the aggressive long trade. The ES was not a place to have an aggressive long trade. And if you get an up close on this, it's not a place to trade at all. Right? And the gold was a place for an aggressive long trade right back here, or a conservative long trade from right in there. I didn't get filled on the conservative trade. I missed the aggressive and I didn't get filled on the conservative. Okay. All right. So that's where we are. Anybody have any questions about all that? All right. If you have not taken a free trial, that's for anybody on YouTube. If you're not taking a free trial, go to mytradingiq.com, click on the purple button. When you click on that, it's going to bring you to this registration page. On this page, all that we ask for is your name, your email, and your phone number. Down at the bottom gives you TradingView login ID. All right. We just need your TradingView login ID there. That's all. Just need to go 5 ticks into profit. But stop to break even. It's going to hit 62.1. Once you do that, we'll know that you signed up for the trial, so you get all the information you need to get into the room in the morning, and we will be able to, you'll be giving us the information we need to get your indicators indicating on your charts. Let's get on one more tick. Get your indicators indicating on your charts. Okay. You see, once you put the trade on, you don't even need to know what's going on with the chart. You just need to manage your risk accordingly. There is a point where you should know what's going on with the chart. That is once you got your stop to break even, you got to look at where the price and high and low is to find out where your new target should be. Okay. We're not at that place yet. All right, so let's go back to the charts. While I'm talking about it, go back to the charts. So on the downside, this should go down to 161.1. It should go all the way down to right here. All right, once it starts moving in that direction, it should go down to there. Okay. The ES did not give the aggressive trade here. All right, but it could give a conservative trade. The NQ did give an aggressive trade there, though. The NQ, where it went into the oversold right at the midpoint, I just went long on the NQ. Okay. So when that gets to 50, I'll bump the stop to break even. Then when it gets to 50. Okay. And it's almost getting there. This needs to go down. This needs to go up. This needs to go up. This, well, I hope it goes down some. Okay. Bring the ES over. We could have a trade here on the ES at the same time. It's going to be 36.50 up to 38.50. So we'll put that there. We need this to get up to 50. We need that to get up to 38.50. We need this to get down to 62.1. Okay. See if I can follow all of these at the same time. All right, this is still in the same place. Still in the same place here. That's not up to 50 yet. That's almost where I can bump the stop. Almost. One more tick. Come on, one more tick. Not quite. All right, so the gold's not giving us anything. The ES actually just dropped down another tick here. 2 ticks, it looks like. One more tick over there on the Russell. All right, and the gold needs to flip to YBR. It just needs to hit it. There it is on the Russell. Stop to break even on the Russell. We need 50 on this number right here to bump that to break even. This is still, can be below that is 36.25. That should be 38.25. Okay. And we're at break even on the Russell after all that. We're almost at the point here where we could bump our stop. I don't think we've gotten there yet. Host. We didn't fill on the ES yet, but we're about to get to the point where we can bump this stop to break even too. I'm going to lock something in. There it is. All right. I'm locking a point on this. That'll pay for the that'll pay for the last trade. I'm going to lock in more than a point now. We're in at 10.25. We'll go up to 15.25. It's 5 points, 20 ticks right there. Okay, we're now in the ES trade too. All right, so we've got 20 on the NQ. We're in the ES. We got to break even on the Russell. 20 on the NQ, and we're in the ES. And do we get in this at the right place? 8.25. Yes, exactly. All right. Well, and gold just flipped. Okay, so with the gold flip, this is the way you got to do the gold right now. Is this on top? And this is the way you got to do the gold, like this right there. Okay. From where it came out of the overbought to where it goes back into the overbought. Okay, so we got 20 ticks on that guy. Ticks on that guy. Break even on this one. Still in the ES, and we'll see about the gold. We might get a trade off here on gold too. We'll see about that in just a moment. Then all right. Does anybody have any questions about anything? I don't see any questions. It is now 1:23, so we have 7 minutes left. We might get a gold trade here. So far, we had that one. We picked up 20 ticks on this one. Go to break even. This one we're still in. Waiting to see if we stop out -10 or if we get some profit. And we might get something on gold. Maybe, just maybe, get a trade there on gold. We're almost there on the gold. And up close here on gold would be an aggressive short. Okay, so you want to see what that looks like? This is what it looks like. The low of the bar is right here at 42.4, so I'm going to sell 10 ticks away from that. Okay, the low of the bar is different now. The low of the bar is now at 42.3, 42.2, so I'm going to sell 43.2 with a limit order. Okay, the limit order. It's not a buy stop limit or a sell stop limit. It's a limit order. Okay, so if price closes up right there, I'm going to sell it. There it is. Closed up and I sold it. That is an aggressive short trade. You want to be aggressive. This is a trade that I'm always going to take. All right. If it goes into the overbought like that and hits the midpoint at the same time, I'm always going to take that trade. Okay. So now it needs 5 ticks in profit. It's got a 15 tick stop on it. All right, so now we've taken trades on all 4 of these markets. We're still waiting for this one to work itself out here on the ES. All right. This is pulled back now. We took the aggressive trade there, just like we did here, except that was a long. This is a short. If that continues up, then this should continue up, and this will probably go sideways to down, and this should go down. The gold should go down. We just stopped out on the ES trade. Okay. All right. Well, then that could go down, and that could go down, and that could go up. Oops, I just lost my gold on. I think we just stopped out on gold too. Let me see. Let me see. Nope, we're still in it. There it is. Do window, always on top. So we went long there, and we did not have a chance to get the stop to break even. And we went short here, and so far we have not had a chance to get the stop to break even. We'll see. We're at 100% retracement right here. So we got 1 tick to go. Nope, we stopped out on that one too. Well, that stinks. But that is the truth about trading right there. We did get the goal for the day on that one. We could have stopped in. The break even there and the 20 ticks there. 20 ticks on the NQ is enough to get the goal for the day. Now we've already had the goal for the day, but we just gave some back there. We gave some back there. Is now 127. We'll see if we get any more trade setups in here. All right, the Russell is finally going down where it should have gone. The S is not going to go up. The NQ, I don't think is going to go up. The NQ is at 100% retracement almost right here. Right, and the S has a little bit more to go to get to 100% retracement. The Russell is.
Now, what is your feeling about 100% retracement?
Well, it changes dynamics a little bit. Okay, if it goes through 100%, or even when it gets to 100%, it changes dynamics. Let me show you. I think I drew a picture of it, but I think I drew it on the ES earlier. Let me see if I still have that drawn on there. Yeah, here it is. Now, I was talking about, when I did this morning, I was talking about the 50% and 100%. And you could go less than 50% if the market's really aggressive. You can go less than 50% to 25%. But my feeling is this: if price is running up like this, right? And this is your 50% mark right here. And if it pulls back and it goes through the 50% mark like this, so your 100% mark is down here now. If it goes all the way down here, your initial target is no longer up here. Where if you hit the 50%, your initial target is going to be the prior swing high. If it goes all the way back down here to 100%, first of all, you don't want to do an aggressive trade at 100%. You want to do a conservative trade. Let it start going in the right direction. And then the midpoint would be the first target.
That becomes your target. Okay.
Yep. Because what's probably going to happen is it's going to go down here, hit 100%, then go up here, stop there.
Yeah, and go back down.
And then continue back down.
Gotcha. Okay. Makes sense.
That is my thought. Yes, that is my thought on that. And that's what usually happens. You know, you'll see it happen again and again and again. Like right here, we're just about at 100% retracement. They'll probably go up to the midpoint and then come back down. You can see it's kind of building that sort of a look right here. You know, a rounding top. And this is the ES. The NQ was the same thing. Sort of the rounding top look right there. That's done 100% retracement right now. So I would expect that to get up to here and then push down from there. Now that goes against, you know, only taking long trades above the YBR. You know, in the past, there have been times where I accidentally took trades against the YBR because I was trading price action. I'd see it come up to here and say that's a great place for a short, and I'd short it there. You know, my whole I'm going to short it. You know, if it goes into the overbought when it hits the midpoint, or if it goes into the oversold when it hits the midpoint. Sometimes I prioritize that over the actual YBR direction that we're getting. But like right here, where it's gone through the 100% retracement just a little bit. If we get an up close on this, I would expect to get to right here or right about there and then turn down. Same thing here on the ES. I would expect to get up to here and then turn down. And the Russell, I think, has already kind of done it. If we blow this up. Yeah, this is really junky the way the Russell came together, but it's done 100% right here. It's pushed down 100%. So now we'll see if it pulls back and gets up into this area right here on the pullback.
Bob K just asked a question. Do you always wait for the reversal bar at those points? That's in the chat box.
Yeah, I see it. What do you mean by reversal bar? You know,
do you mean, Bob, after a string of red candles, then a green candle? Or a string of green candles?
Okay. Yeah. All right, that makes sense. Okay, yeah. Well, yeah, it's got to close in the right direction. You know, when it goes into the oversold, it's got to close down. All right, when it comes out of the oversold, it's got to close up. You know, sometimes this line down here will go opposite of what the actual close is, but usually it's going to go in the direction of the close. Okay, so yes, if I'm waiting for the reversal bar to come, like this one right here, if it were to come up here and hit the midpoint, I'm going to be looking for a close off the midpoint. Okay, so a down close at the midpoint in this case. But Bob, it's a good question though, because when I'm doing aggressive trades, if I'm doing it aggressively like I did here on this one, where I shorted right there at the up close of that, I shorted right there on an up close. That was because it was aggressive. And one that I did over here on the NQ, I went long on the down close right there at the midpoint. Okay, so I don't always wait for it to close in the right direction. If it's closing at the right point, you know, the 50%, I do that. But if it's closing at 100%, then it always has to close in the right direction. I wait for that reversal bar. Okay, but if that's 50%, I don't wait for the reversal bar. If that's 100%, I do wait for the reversal bar.
I'm sorry.
Okay.
That recent swing high on the ES at 60.41 1/4. The zone above it is at 60.43/44.
Okay, so it's right up here.
So it just missed it by.
Yeah, by a point.
A couple.
Yeah. Well, that's close.
1.75.
And you know, and zones are areas. So getting within a point of the zone is good.
Yeah.
And it should be used as targets. So if you were long from down here, you could have used that as a target.
Yep.
Any of the long trades that we had, any long opportunities that we had on the approach up here.
Now,
this
if
was
the ES continues lower, The zone below is at 59.91/92 is way down there.
Wow, yeah, that's a long way down. All the way down here.
Yep. I would take
You'll
out.
go all the way over here to find support for
see,
that.
that's where the overnight low was. 59.91.
Right there, yeah. 10 June. Yeah. Yep. All right. Well, I have run over, so let me pass it back out to you. Fabulous Phoenix, Arizona. But before I do, let me say this. If you haven't taken a free trial, go to mytradingq.com, click on the purple button. There's no credit card required for the trial. Click on that purple button, and you'll be sent to this page. Just fill it out. All right. And with that, I can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park.
And remember, guys, when you take the free trial, you're not just getting access to the live training room, although that's kind of the main thing, but you get access to everything. We treat you just like you were a passport holder for 5 consecutive trading days, so that no credit card required, so that at the end of the trial you can make a well-informed, intelligent decision whether or not trading is right for you. So you get the whole enchilada. 5 consecutive trading days. The weekends don't count against you. A holiday doesn't count against you. Michael going on vacation doesn't count against you. So.
Doesn't count against you.
Okay, recap of the morning session.
Today it took 8 minutes and 3 trades to get to $4,050.
Nice.
Thank you.
Very nice.
Thank you very much.
All right, guys, we're going to pick up where we left off. Now, we had gotten to the NQ, and I know some of you showed up late, so just real quick, I'll walk you through the ES. Now, everyone had these targets 3 minutes ahead of the open last night. I was running behind by 2 minutes. I was afraid I wasn't going to get them out before the open, but I did. Got them out at 5:57. Market open at 6. So the ES, we had the long target, we had the short target, hit it again, then we hit the long target. Now, I went through a long, detailed explanation. So once this broadcast ends, if you want to watch what I had to say earlier about each market, all you got to do is go to youtube.com/CFRN. About an hour after the broadcast, YouTube will have it published. The Dow at the long target and the short target and the long target again. Russell, we got the long target, stopped at the zone, sent us back down to the zone where the market found support. And since we couldn't break that support, we never had a chance to make a run at the short target. That support sent us back up to and through the target to the high of the session. And now the step line is crossed, so price is doing what we expect, pulling back to the BBC. And so for right now, price is kind of trapped. Okay. Now, the pullback holds more often than not. You can see it right there. And then down here, pullback hold. Doesn't matter which side it pulls back from. Pullback holds more often than not. However, if on the next candle blue and climbing becomes red and falling, we know eventually price is going to trade through the BBC. If that happens, make sure you see this as potential support, the low of this candle, the low of this candle, and then this target, a bullish cross formed right at that long target. So if price does come down through the BBC, I would expect it to find support on the top of that long target and then attempt to move back above the BBC. Now, maybe that doesn't happen and price just starts to crater. Well, my move would be here. Now, I know that takes patience, and I know most of you just want to, make your money and get on with your day. But wait a minute. Oh yeah, that went all the way down. Okay. So I just want to get into the wick. Now the Russell, the zone's 44/45. So that means you need to get in at 47. So that means you'd have to get in, what's the low here? 47.10. You know what? That's cutting it a little close. I'd go find a different market if I needed a trade to get my goal for the day. Okay, now we're going to pick up where we left off. Remember, I did an in-depth analysis of each of those markets, and you can see it a little later on our YouTube channel. So the NQ, here's where we opened last night. Right at the BBC, we got red and falling overhead, but red and falling turned to blue and climbing. Buyers came in, sent us right up to the target, through the target, all the way up to the zone. Now this one candle right here, okay, this candle opened at 21.8, we'll just call it 21.870, and ran up to 21.940. That's about $1,200 per contract traded. And of course, you'd be expecting resistance at the zone, and that's what we got. Resistance always sends a market looking for support, which it found at the short target. That bounced us up into the step line, resistance, which sent us back down to the target and the zone. Support then sends the market looking for resistance, and it found it. Now look at this high and look at this high. In the parlance, that's what they call a double top. Now, price is below the step line and blue and climbing, but the BBC is sitting right here at the long target. So you've got potentially support times 2. Now, if price trades through, okay, and I don't mean it just, spikes it a little bit, you've got a beautiful opportunity right here. Oh, goodness. That would be, let's just call it 21.800 down to 21.760. That would be 40 points at $20 a point. That would be $800 per contract traded, if I did the math right. If not, you get the idea. NQ pays $20 a point. Notice how we went from resistance to support, but then on the way back up, we failed to make it to the zone. That's a sign of weakness. That's why I'm thinking that just maybe this time price will, now it's already bounced. It's already bounced off the BBC and the top of that long target. Okay, we still have a red candle, and there's still, what, 19 minutes left in the life of this candle. So let the candle close. Support could give us another leg up, okay? But if this support fails to hold, okay, don't just dive in right here, okay? If it's really going to drop like this, and you catch the meat of it right here, you might be able to go a little something like that. And to me, that is a conservative window of opportunity. Crude oil. Okay, again, this is Tuesday, this is Monday. Back over here is Friday. Okay, so yesterday we found support at the zone, we found resistance at the zone. Pull back to the BBC held. This held. Okay, yeah, I know we spiked it, but both candles are still touching the BBC. So there was, while we spiked it, we never pulled away from it. That's the key. Okay, so here's where we opened last night above the zone. We punched through blue and climbing to hit the target pretty much to the tick. Target was 55 and we actually hit 60, 65, 66. So, goal for the day. Then resistance sends us to support at the BBC, which bounces up to resistance at red and falling, which sends us back down to support at the zone. And then we get back above the BBC, we get a leg, a retracement, and we hit the long target again. A little consolidation, pull back to the BBC, the pullback holds, and look at this monster. This thing opened. Now, I wouldn't have bought it at the open because we're below the BBC. But the entire candle opened at, we'll call it 65, we'll call it 66 bucks. No, we won't. It opened at 65.40 and ran to 65.90. That's $500 per contract traded in that one candle. But again, you wouldn't want to enter it. You know me, I'm always so conservative. I'd probably enter it up here. The zone's at 65.90, so I'd have tried to get in at 65.80. Okay, once the high of that candle was broken. And I know some of you go, well, gee, you're leaving a lot on the table. If you think like that, you'll make yourself crazy. Okay, your goal is to get your goal for the day. Don't ever look back and fester over whatever it is you left on the table. Okay, just don't. I'm telling you. You see, that's the beauty of our training and our mentoring, is that you don't have to make the same mistakes Michael and I made for years as we learned things. So when you become a member, you're not just getting some indicators and a live training room and some alerts. You're getting the benefit of every mistake that he and I made individually and together for years. So, I mean, when you factor in what it costs to become a member, be sure to keep that part of it in mind. We will save you a whole lot of time and a whole lot of treasure simply by preventing you from making the boneheaded mistakes we made. Price is trading through the zone. Okay, so we should be looking for, oh, we got red falling overhead. Nice move down on tap. 65.05 to 64.95. I think that dog will hunt. Although I'm a little concerned right here. See where the step line crossed through red and turned it to blue? That can often become a support point. We're going to call that $65. So you'd need, and getting in at 65.10, well, we've already been there. So I guess you're on your own with this one. But this window I drew yesterday, that's still valid. And it will remain valid. Every window of opportunity I draw always remains valid until triggered. Whether it takes a day, a week, a month, 6 months, a year, that will remain a valid short window of opportunity until price enters the window. Whether it completes it and fills the window or not, it's valid till price enters the window. Okay? Gold. Yesterday, we found resistance at the zone. Then we overshot the zone, but we never did fill that window yesterday that I drew. Now, I drew that all the way back. I had to key off of Friday, Tuesday, Monday, Friday. How far left do you have to look? as far as it takes. So while we didn't fill it yesterday, overnight, if you look at these two, this little double top right here, we filled it almost to the tick. And once a window fills, the market it likes to repeat itself. So you get your pullback to the zone and the BBC, support times 2, and that sends you up again to fill that window a second time. Resistance at the zone sends us back to the zone for support, but we traded through support and we found support where? At the previous bullish cross that happened during this session. When the blue line gets above the green line, that's a bullish cross. And when a bullish cross leads to an extended move, the first time price revisits that area will almost always be what? Good support. And you're like, well, but wait a minute, when you put that target there last night, this bullish cross hadn't happened yet. You're right. I was keying off this bullish cross. If that doesn't make you say, whoa, I don't know what would. Now the step line's trying to cross red and falling here, so maybe gold doesn't go lower. If it does, this looks kind of nice. Remember, you only need a $1 move in gold to get your goal for the day. 33.34 down to 33.30. Let's make it 31. That'd be $300 per contract traded. But because the step line is crossing, price may head higher. Okay. Well, should that happen, then you got this window here. See right there where the blue turned to red, that's the top of my window. And you know what? No, it didn't cross it till down here. So yeah, I think that stands. So a long would be 33.59 up to 33.61. Conservative, $200 per contract traded. So whichever way the market goes, unless it just goes sideways into the close, those are two valid trading opportunities. Oh, and this window I drew yesterday, as you can see, that filled overnight. This candle came right down to the top of the window and bounced, but the next candle traded all the way through the window, and then it ran into the support right here. See where the step line crossed red and falling? That's this low right here. Trade every market exactly the same. So the market found support here at a spot we would expect. Red and falling turned to blue and climbing. We trade through the BBC, consolidate at the zone, then hit the long target, come back, do a little more consolidation, hit the target, trade through it again. Now we're just waiting to see what happens here. Okay. Last but not least, silver. Silver's been on a real tear. I mean, 13-year highs. So to have, if this is as bad as it gets, this sideways day of quiet consolidation, there'd be a whole lot of happy campers around the world. I mean, look at how far silver has come just in the last week. Now I'm taking us all the way back. Taking us all the way back to June 1st. Today's the 10th. We had this, and we had this nice retracement. And then some quiet consolidation. And then on fire again for this big move, which gave us a perfect 50% retracement right back to the BBC. Then continued up. That was the 6th. So these zones, these are this week's zones, not last week's zones. But anyway, the window I drew in, it ended up filling. This window I drew in filled. And we kept climbing. And I drew that in the live training room yesterday. And that filled beautifully. Then we consolidated at the zone. Remember, when price encounters a zone, 70% of the time you're going to get consolidation like this, like this. 20% of the time you're going to get rejection. 10% of the time you're going to get what's called the slice. See how this 30-minute candle sliced through the zone like it wasn't even there? Well, when it ran out of steam, filling this window beautifully, it retraced back to the zone it sliced through and continued in the direction of the slice. Yeah, so if this is as bad as it gets today and we start rallying again tomorrow, last week we closed way above the highest weekly trading zone. That is this week's highest weekly trading zone. So I'll go out on a limb here on a Tuesday and say by Friday we may see that thing. And at some point we may have a really off day in silver, which, you know, would equate to perhaps a 50% retracement of the entire move. And so, you know, the talking heads on CNBC, they're going to go, oh, the silver rally's over. No, it's not. It's just getting ready for the next leg. So, price does not move in a straight line. It goes leg retracement, leg retracement, leg retracement, leg. Let's see where we failed to put in a higher high here. You should expect lower prices. Boom. Leg retracement, leg retracement. We're back above the BBC. So, and red and falling is directly below price, which means an up close on this candle is going to turn this to blue and climbing. You only need 2 pennies in silver to get your goal for the day. So what are we looking at? 36.74 to 79. That would be 5 pennies. That'd be $250 per contract traded. 2 pennies is $100 per contract traded. Silver is not the best market for someone just starting out. The margins are kind of high, and sometimes it can be a little finicky. So I would cut my teeth on the ES or gold or, you know, crude. The NQ probably not the best market for beginners either, because it has such incredible volatility. Now, we don't know yet for a fact that price is going to continue higher, but the ingredients are present. Red and falling has gotten directly below price. So in 3 minutes, we're going to get a new candle. And if that turns this to blue and climbing, then this is a trade I would take every single time. One last look at the daily chart. Our high yesterday, we ended up with doji. We talked about that during the afternoon broadcast yesterday, that the day might end up as a doji, and it did. I don't have crystal balls, not psychic. But as you learn the language of the market, when you learn to read the chart the same way you would read a magazine or a mystery novel or whatever, okay, then it doesn't happen overnight, okay? You're not going to become fluent in a week. It's taken me 20 years to get to where I am now, and where I am now is nowhere near where I want to be. So, but you guys help keep me and Michael on our toes. We're constantly learning, constantly, trying to make things simpler for you, which in turn makes it simpler for us, and so on. So remember, the next major resistance we're looking at is up here at 60.57. After that, 60.70. Okay, might want to jot those numbers down, because on your smaller time frame, you don't know there's potential resistance there, or at the bearish cross. You can't see that on the smaller time frame, which is why I encourage you, if you've got the digital real estate, have a daily chart, have a 30-minute chart, and then have your range charts, okay? Now, Michael does lots of counter trend trades in the live training room. They're not counter trend trades based on the range chart, but compared to the 30-minute chart, they could be counter trend, okay? And I'm not saying there's anything wrong with that. Obviously, he does very well every morning, okay? Me, man of a certain age, kind of stuck in my ways. I like to trade in the direction of the flow of the 30-minute. And in the back of my mind, I've got that picture of the daily chart. Again, if you'll spend 2 minutes a day with the daily chart of whatever it is you trade, before you start trading, you're getting a free look over the shoulder of the institutional traders who move price. I'm talking about the guys at State Street, the guys at BlackRock, the guys at Vanguard, and all those other institutions. Okay, you can see what they're doing or not doing. Yesterday ended up with a doji. That's a nothing burger. And we could end up another one today the way things look. I feel like the market wants to rally, but what I'm seeing on my smaller time frame says we may not. But you're not only able to see what the deep pockets are doing, but you're able to identify things you cannot see just on your smaller time frame. Like support. I mean, we've got support times 2 right below price. The step line and balloon climbing. Because they're directly below price, they're potential support. Then you got the low of Friday, and then you're at the daily BBC. Okay. To become a member, you won't believe how simple it is. Go to mytradingiq.com, watch the videos, read the content, and when you're ready, send an email to support@cfrn.net. Just tell us, hey, I'm convinced. I want to become a member. Valerie will send you an info-packed email with everything that it means to become a passport holder. She'll even include a link that you can click to seal the deal. Number 1, you're going to get 2 hours of live interactive training every trading day. By interactive, I mean, as Michael is putting on and taking off trades, he's explaining every move he makes, every trade he takes, and we show you the results, good, bad, or ugly. Okay, we don't sweep anything under the carpet. And at the same time, he's answering every question that pops into your head, if you ask it. Don't ever hesitate to ask a question in the live training room. People have told me again and again, well, you know, he's working so hard, I don't want to interrupt his flow. Interrupt his flow. That's the reason we have the room, so that you can ask questions. If you don't ask the question, you're not going to learn the answer. Well, if I just watch, I'll absorb it sooner or later. I tried that with Spanish for over 2 years, going to Mexico every other weekend. I can say baño and taco and bueno. So that's not going to work. You got to show up and do the work. And the work is, in the beginning, to listen to what's being taught, watch what's being taught, trade along in your demo account so that you can qualify to go live, and ask every question that pops into your head. Because it's rules-based trading in the live training room, okay, you're going to run out of questions. Or you're going to eventually find yourself asking questions that you already know the answer to. Why? Because you already asked the question. And the answer never changes. 9 out of 10 new traders fail simply because they don't have a teacher. I wish I could promise you the passport would make you the 1 out of 10 that actually succeeds, but I can't. We're going to give you the information, we're going to provide you with the tools, but we have no way of knowing what you're going to do with that information and those tools. Do you have self-discipline? Do you have patience? Are you able to follow the rules? Or do you always jump the gun or drag your feet or whatever? Well, guess what? Whatever problem you have that you can't seem to overcome, as a passport holder, you get private one-on-one mentoring. All you got to do is ask. The strategy you learn, the indicators you own as a passport holder, are fluid across all markets and all time frames. Stocks, futures, crypto, Forex, ETFs, it doesn't matter. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. It's how markets work. That's why you got to learn how to read the chart, so you know where to anticipate resistance and anticipate support. You get the Logic 247 alerts around the clock. You get the concierge trade alerts the second they're published each evening. Every Monday morning you'll get the weekly trading zones. And next month will mark 15 and a half years that we've published the weekly trading zones every Monday for our members and trial members. And on Thursday afternoon you'll get an invitation to join us for the members only workshop at 8 p.m. Eastern Thursday night. And if that weren't enough, you're going to get the golden key that opens all the private channels in Telegram. We have public channels, we have private channels. Now, this is something you probably won't find anywhere else. When you're on the trial, we allow you in the trial discussion group to mix and mingle with our traders. Now, the reason a lot of places, most places, don't allow you to do that when you're on the trial is they're afraid somebody's going to say something negative. Oh, I wasted my money, or this method don't work. We're not the thought police or the speech police. But because we pour so much time and energy into teaching our traders this methodology, and we start you out in sim so that you got to put together 10 consecutive days before you go live. Now, we can't enforce that, but you'll get something called the 24/20 blueprint And that's one of the first things it explains. It would be foolish to just start trading real money right away coming out of the gate. You got to learn the strategy. You got to learn how to read the indicators. You got to learn how to read the chart. Okay? So, anyway, it is everything a trader needs. All under one roof. One low price. If you're ready, send that email to support@cfrn.net and let us know you want to become a member. And if you're a veteran, let us know. We'll build in a discount for you. Okay? All right. We're going to wrap it up with our good word for the day, which I have lurking here somewhere. Where did I put it? Oh, it's right here. Get alone with God. You know, we lead such busy lives. Either the TV's on or you're listening to some music. It could even be praise and worship music, but your focus is on the music. Or maybe listen to your favorite podcast. Alone time with God means just that. No distractions. Just you and God. If you have 10 minutes to pray, now God already knows what's on your heart and what's on your mind. What He wants to know is, will you trust Him to share the most innermost part of who you are with Him? Because if you do, that shows Him that you trust Him, that your faith is in Him. So you're like, God, I could never pray for 10 minutes. I'm not asking you to. Set aside 10 minutes to be alone with God. Pour your heart out for 1 minute. And then sit still and let God, through the power of the Holy Spirit, speak to your heart for 9 minutes. Now, maybe that's a stretch, so you got to start out with 30 seconds, and you only got 5 minutes. Whatever it takes, okay? Mark 1:35, Jesus got up, left the house, and went off to a solitary place where he prayed. To grow spiritually, you must get alone with God. When you come into His presence, you should have these attitudes. Now, this is part 1. Part 2 will be tomorrow. Number 1, anticipation. Expect to give and get from your time together. Make it a time of intimacy. It's impossible to have a love affair in a public place. Intimacy calls for being alone with the one you love. The Bible speaks about Christ as the groom and us as His bride. I know that some of you men, that kind of creeps you out a little bit, but get over it. Go read 2 Corinthians 11:2. Think of the anticipation and excitement shared in such intimate moments. Number 2, reverence. Don't rush into God's presence. Prepare your heart by being still before Him and letting the quietness clear away the thoughts of the world. Remind yourself who you're meeting with. God, the one who is worthy to receive glory and honor. Revelation 4:11. Number 3, alertness. Go to bed early so you'll be in good shape to meet with God in the morning. He deserves your full attention. Give Him the best part of your day when you're the freshest. Follow Christ's example. very early in the morning, while it was still dark, Jesus got up, left the house, and went off to a solitary place where he prayed. Mark 1:35. And number 4, willingness. It's crucial that you don't come to your quiet time to decide what you will or won't do, but with the purpose of doing anything and everything God wants you to do. See, that's where the 9 minutes come in, where you're actually listening to him. John says, "And we will receive from him whatever we ask, because we obey him and do the things that please him." 1 John 3:22. When you get alone with God, make up your mind to do whatever he says. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.